Today was a big red day. We're down 11.38% from yesterday's close. So what happened? I'm going to let you know right now. Here's the 1 minute chart. And when I was shooting yesterday's video shortly after market close, I said I expect after hour market volatility. And that is exactly what we saw. At moments, probably minutes after I said that, this big spike ran up, and then we saw the price fall down, and then just continue to take damage. And then today on open, we saw the sell off, and there was some volume here. Is this a change in sentiment? Is this a reversal? I don't believe so. I really don't, and there's a number of reasons for that. However, I do believe that this could be technically damaging. Tomorrow will really dictate what happens. Now, it's likely the price came down and a bunch of stop loss orders were filled, and that could have started this downtrend. And from that point on, it wouldn't be too hard to knock the price down further. You're going to see some gray horizontal lines, and they're grayed out. I'll select them so you can see them. These levels, $40.52 and $39.38, these are previous levels of support and resistance from previous days. And I'll show you where they come from really quick. I have those levels now a different color. They're in this deep purple. This is my 15-minute chart. I'm going to run through it really quick. This is my favorite chart because this is where I do the majority of my work. You'll see the pennant, a half staff tilted flag, and then I wasn't sure if we saw a head or shoulders forming, and it was a head and shoulders, and so the price came down. And right here, a rectangle formed, and I set a price target down here. It turned into the head of an inverted head and shoulders, and we saw this neckline, all of this play out exactly as I forecasted it. I mean, as near as you can get. And then we saw this tremendous run up, and then this pennant form and a breakout to that pennant target. It's just amazing to see these values that I calculated through Bulkowski's statistical technical analysis be reached with such accuracy. Now, I want to continue in that same vein. Remember, all of my analysis is based on what Bulkowski publishes on his website, thepatternsight.com. Now, this conversation might be a little scary, but like I said, I don't believe sentiment has changed, and I don't think we've seen a reversal, but I am going to show you what I see shaping up. From the bottom of that head and shoulders, we saw a run. We saw a drop down, and now we saw a recent high and another drop down to a similar level from the previous retracements. And this is starting to look like a head and shoulders top. If we see a bounce tomorrow and that bounce fails to reach above the previous two peaks, specifically if it fails to reach above the first peak around here, what was that level? It was like 44.21, I believe. If price fails to reach that and bounces down, there is a serious risk that the price will continue to fall further. How much further though, and when will we know that will occur? The head and shoulder top won't confirm until the price drops below the neckline, which I have shown now in here. It's kind of like this horizontal line. And if that plays out in this way, the target is 32.78. Okay, I'm going to turn on my daily chart drawings really quickly because this is where I have the new floor at 33.82. And really quickly, you can see how these daily chart drawings look on the 15-minute chart, and it looks great. Doesn't it look great? I love it. There's a lot you can take away from here, from where the gap started to where we found support around the symmetrical triangle and all of these things. And maybe I'll get into that later, but I'm not focusing on that. Let's talk about why I think technical damage has not really been done yet. This is a comparison of the unbalanced volume. Now, the unbalanced volume essentially takes the volume and it adds it together, or it subtracts it. It just depends on the day. So if you have 3 green days, it takes the volume and adds those volumes together. If the 4th day is red, it subtracts the value of that red day's volume from the total. And so you get an idea of how many shares overall are being purchased and how many are being sold. And then we can compare that to the relative price action. So let's take a look here. I compared the last peak from the peak of the pennant and compared it to the unbalanced volume at that time. And as you can see, the unbalanced volume is still higher than it was when the price was at that peak. And now the price is very much far below that peak. What that suggests is that the price was driven down with fewer shares than pushed it up. There are more shares, more positions open above the price than where the price is at. And this would indicate that a run up is due. Now, that is kind of scary because that could also play into the head and shoulders top, right? Which is why I say I'm only scared of a failed run. Quick closing thought on unbalanced volume. you can see the unbalanced volume more or less mirrors price action. I'm starting over here on the left, and the price goes up and down in the pennant, and when the pennant breaks out into a flag, you see similar things happening in the unbalanced volume, right? Like, we don't chart patterns on unbalanced volume, but when the unbalanced volume looks like what you see in the charts, that's a good indication that that move is representative of the actual trading. And you'll see this pattern continue. The head and shoulder forms and the price drops, and we see this bottoming action. And the OBV, it's more gradual than the trading. And that's the point, is that the unbalanced volume gives you a better average idea of what's going on. And then from this point, when we exited from the inverted head and shoulders, the OBV goes up and up and up and up and up, but the price just came down. I think that we're going to see some action tomorrow that's going to clear this right up. Moving up into the 4-hour chart, you'll see I have a downward channel in pink, and inside of this there is a double bottom forming based on a partial decline. Bulkowski's website, thepatternsight.com, identifies a double bottom confirmation at the middle peak of the double bottom, and that price was $44.44. We did see a close yesterday above that level, which would confirm the double bottom. However, the price is now dropping. Why is that? What could that be? Bulkowski does provide statistical analysis on handles. He calls them waffles. It's a waffle zone. The price doesn't know. Does it go higher? Does it go lower? It doesn't know. But let's see what he says about the waffle zone. Here we are on the website. He says, sometimes price will confirm the double bottom, like we just saw, then waffle up and down, forming a handle. When price breaks out of this region, it often moves up in a strong trend. The figure to the right shows a handle. And this is why I think tomorrow is going to really clear things up. We're either going to move below that handle, that waffle zone, and that'll just tell us right away, okay, price is going lower, or we're going to stay within it, and that'll actually be bullish to see the handle form. If the handle doesn't form, the head and shoulders pattern is no longer valid, and I like that. I would actually prefer to see a trend downward along the top trend line of the symmetrical triangle than a failed run. So this is why I have my chart labeled Waffle Zone. As you can see, the target for the double bottom is $51.40, and I maintain that at any time we might see a break to that level. Let's talk about the daily chart. What do I see? I see my symmetrical triangle once again coming into play, marking where the price found support. I don't mind the triangle acting as support. I don't. It's not uncommon in a breakout to see the price move out and then come back to the pattern and then bounce off from there. In fact, I wouldn't be surprised at all if we see like a double pipe bottom. Ideally, tomorrow we want to reach back into the upward trend. Okay, this is best case scenario right there. Best case scenario. Tomorrow is a big signal day, especially at open. If at open the price continues to tank, that would indicate a change in sentiment. If tomorrow there's an open and volume is high and the price surges, that would confirm that the bullish sentiment is still strong. And lo and behold, my Fibonacci time study. The whole point of this study wasn't to identify the peaks or when the best time to sell would be. It's based on when the best time to buy is, and so that identifies the dips. What you will notice is there is a matching ratio between dips from the first move from January to June and then June to present. That ratio would suggest that the dip is in, and today we saw a dip. Essentially, a dip is the bottom of the dip is the beginning of the next run. So if the beginning of the next run started today, that would suggest that today, or the price that we close at today, is actually the breakout price for the symmetrical triangle. I wouldn't be surprised by that in the slightest. We saw a little break outside of the triangle, we saw a little break up above the triangle, and now we're at the very top level of that channel, and this time study is suggesting that, hey, it's time to start the next run. Sounds like that makes sense to me.